All right. Is this working? What do you need to know about today's CPI data release that just broke? It's the morning of October 10th, and inflation data was above expectations by 1 basis point. What does this mean? That we were expecting some potential de-inflation, and that's even what the Fed was hoping for. This is really going to modify the Fed's funds rate cut that may or may not be coming when they meet early November. If you've been paying attention to mortgage rates these last several weeks, we saw a jobs report break last week, and then mortgage rates went from a low 6, right now sitting around 6.67 for the best qualified 30-year fixed buyer. Now, obviously, some lenders locally might have a little bit of a better rate, but this inflation data coming in over expectations is not good for mortgage interest rates, right? So mortgage interest rates, if you're not paying attention, they do follow inflation data. So even though the inflation data was 2.4%, 2.3%, it was just 1 basis point over the expectation. This is still not good. This shows that month over month, year over year, inflation is still, although close to the goal, not necessarily what we want. We want to see de-inflation right now to be able to cut interest rates. So what does this mean if you're a home buyer? Well, this means that probably when all the news broke a couple weeks ago that it was the best time to buy a house in the year, which is usually the late September months, early October, when rates were actually down in the low 6s. It was, in fact, the best time of year. We had almost a 2-year interest rate low, and this was a great time to purchase as inventory here in Massachusetts has surpassed 10,000 different properties in the market. Just a year ago, this was somewhere in the 2,000 to 3,000 to 4,000 range. Now, don't get me wrong, some of these are condos, some of these are single families, and of course, some are multifamilies as well. But inventory is way up. Now rates are going back up. So we expect now the Fed may or may not cut, definitely not probably 50 basis points, maybe 25 basis points in the November 5th and 6th meeting. And I expect interest rates for mortgages to go probably slightly up. They also might have already reacted and got to this number over the last several weeks, expecting that with more job creation, which will probably get revised, but with more job creation than expected, that potentially inflation was not under control. So we always say that when rates go up, they take the elevator. When they come down, they take the stairs. And we expect rates to kind of stay north of 6.5 here, probably for the duration into early November, because remember, mortgage rates are going to move ahead of the Fed funds movement, right? So just a quick hit on CPI inflation data. Not good news. Not good news for mortgage interest rates. Potentially good news for buyers as we see inventory starting to stack a little bit, that you might see some pressure relief in sellers who are sitting with their home on the market. I mean, some of the properties that we put on the market recently have been a little bit slower than we expected. We are also finding that it's less of a craze to grab things potentially at an open house. And we're seeing those private showings really take over during the week with the most serious buyers. So if you're a home seller, stop being stubborn on your property price. The reality is we cannot push it in price anymore, and we do have to be a little bit lower, and we have to be a little bit less hopeful that we're going to push into a bidding war type scenario, because there is more choice and consumer sentiment, essentially buying power, and the buying ability of these buyers. The buyers just have less demand right now. So again, this is all super micro to different markets, but some of the hottest markets, the hottest suburbs, the hottest schools, are still going to be very, very desirable. The Arlingtons, the Melroses of the world. But some of the local city communities that we do most of our business in are definitely a little bit softer, again, depending on the product. So if you're a seller, stop trying to price your house through the roof. We got to be a little bit more realistic. It doesn't really matter that, you know, Johnny down the street sold their house that was just as good as yours or better, and it went in a bidding war. The market's been a little bit different recently, and of course we have an election coming. We're expecting the market to be a little bit softer as people are pausing now more than they were than even a few months ago when all the turmoil started to happen presidentially. So, and again, if you're a buyer, listen, I still firmly believe that we're going to see interest rates eventually start to come down here and stick down in that low 6, high 5s. Of course, the data the last 2 weeks has not been ideal for us as buyers. And so when they do come down, of course, prices will go up. So we might see a little bit of a price correction here in the next few months where we're seeing again, homes have still gone up 5, 6, 7, 8%, depending on where your home is. But we do expect maybe a few more price reductions than we've seen in the past. So I just wanted to make a quick video for you guys and update you a little bit on what's happening with the CPI, inflation, of course, mortgage rates, and the jobs report last week. And hopefully this was helpful. Please shoot me a DM or subscribe if you want more content like this.